Good morning, everyone. I'm Richard Calhoun, real estate broker in Silicon Valley for the last 40 years. We're here today to talk about the data. I also encourage you to stick with me for about the first summary, about first 6 minutes or so, because I do have a significant disclaimer to make at the end. This is the summary. It's showing you the blue line is the available inventory. And you can see last week we were right here at 100%, which is the yellow horizontal line. This week we went up quite a bit. So we have a lot of new inventory, more inventory than you normally have compared to the 5-year median. The 5-year median is up here 2015 through 2019. The next significant line is the number of new listings. That's the gray line. That's dropped. So it's hard to explain why the number of new listings is up so much when the gray line's coming down unless the number of offers has dropped. Number of offers is the red line. So you can see the red line was right here, somewhere about 160% of normal last week. This week, it's down at around 110% of normal. It has been running at about 120 to 140% of normal this year. So the fact that it's down at 110% is noteworthy compared to where it's been recently. And for some reason, my laser pointer is not working today. And so we will do it with just the cursor. So now what we're looking at is days of unsold inventory. Days of unsold inventory is the single biggest indicator of where the marketplace is doing. It's the ratio between the supply and demand. What you have here is the 5-year median being the yellow line. The blue line is the current data. So you can see the blue line has been significantly below the 5-year median for basically since week 7 all the way up through week 21. This last week, it shot from basically 20 days of unsold inventory up to 30 days of inventory and right where the 5-year median is. That is a huge change in 1 week. There's a lot of things that went on that may explain some of that. Now, this is showing the overbidding. This is how much pressure the buyers are under. The current line is the purple line right here. You can see it's sort of buried, but it's towards the top. It's noteworthy that it's coming down on the top end a little bit, so buyers are not feeling the need to overbid as much again for some reason. But remember, this requires sale price, so it lags by the length of escrows, which run right around 35 days. Moving on to the appreciation, this is going to be the maximum number of weeks I can fit on the graph. You can see from last week, Santa Clara County, countywide, has seen an appreciation jump again up to 20.4%. That appreciation is over the entire calendar year of 2021, which the median price was $1,370,000. The median close of escrow was August the 10th. Now that's later than a lot of people might think. You might think it should come up on July the 1st, but real estate is slow to get started as far as closings are concerned. And that's because it takes 35 days to close them. So essentially the middle of the month, the middle of the year is essentially August the 1st. And then you also have the holidays, which starts you off very slow, but it rapidly comes up. So it makes perfect sense that all these median close of escrow dates are somewhere around the first week of August. And the calendar median is for every transaction that was closed that was reported to the MLS. So 20% appreciation from August of last year is pretty significant. You can see that it varies in the different micro market areas. It's sort of noteworthy that Saratoga Las Gatos is now with the highest at 35%, but that's been floating around 13, 15%. You can see it jumped up quite a bit last week. So that's probably a statistical anomaly more than real appreciation. That brings up the summary. So let me go into a little bit of a disclaimer of why I'm a little bit concerned. I'm confident in the data that I'm presenting as far as it being accurate from what's reported to the MLS. But a few things that weren't really announced are significant. A new MLS joined the Northern California Alliance, so that brought more data on. A couple of the MLSs were having data instability, and there was times when the MLS wasn't available. So I'm concerned that maybe some people didn't report some sales that actually occurred. As far as I'm aware, Santa Clara County, which is what this data is for, was not impacted greatly, but they're very close to the vest with their information when they're having trouble. So I'm not sure I'm 100% confident in the data the MLS reported. And I'll just show this next slide before I take questions. This was from just last week, even though it says it was from 2 weeks ago. And you can see we had 16 days of unsold inventory based on 1 week, 17 days of unsold inventory in Santa Clara County single family homes based on 5 weeks. This is the data that I normally report right now, jumped to 31.1. That's huge. I consider a 5-day shift in a week to be a market shift. Now you went from 16 to 31. That's a doubling. What the heck happened? Look at the number of offers reported in Santa Clara County, only 227. Last week, you were at 325. 1/3 of the buyers disappeared in 1 week. Yes, it's a holiday week, and what normally happens is sellers pull out of the marketplace, but it's the week after, people come back, they should have been there, but the holiday complicates the data analysis as well. But there's a huge shift in the data that coincides with a shift in the MLS data, known problems with the MLS, and a holiday. So even though this is an accurate representation of the data that's on the MLS, I'm not sure how confident I am on the MLS reflecting what really happened in the marketplace. So with that, I'll do a quick little summary. The green URL is what I call my base URL. That's right here. That gets you to the YouTube channel. If you add on the year right here, that gets you to these meetings Saturday morning. If you add the word handout plus the 8-digit month, year, date code, that gives you a 24-page handout that was posted as of about, I think it was 8:52 when I got it up. So with that, I will be quiet for a minute and see if anyone's got any questions to ask. So here is where we start talking about what's happening in the different areas. So we look at inventory. Inventory is broken down by single family homes, condos, and townhouses. I would actually like to separate condos from townhouses, but there's simply not enough data points to do that. You obviously separate the counties. I also separate the micro market areas, but we're trying to look at a global thing of what's going on. So a week ago, we had 761 single family homes available in Santa Clara County. Now we have 1,008. That's an increase of basically 33%. So we talked about a 33% drop in the number of offers reported. Now I'm reporting a 33% increase in the inventory available. If these are real numbers, the buyers are going to feel a whole lot less pressure. 31 days, which is what that works out to, is still a strong seller's marketplace, but it's nowhere near where it was at 17. So it's going to be interesting to see what happens, how that shakes out. In San Mateo County, you went from 398 to 434. That's an only increase of yeah, that's significant, but with it being a holiday, going into a holiday week last week, that isn't to be unexpected. The unexpected is this huge jump in Santa Clara County. If you look at the condos and townhouses, they had a jump of 10% in Santa Clara County. So the one area where the jump is just out of line is right here. So one of the concerns you have that says that this is an accurate reflection is your San Mateo County single family homes looks reasonable. Your San Mateo County condos and townhouses look reasonable. Your Santa Clara County condos and townhouses look reasonable. Why would only the negative impact be single family homes in Santa Clara County? So for whatever reason, there appears to have been a huge influx in inventory of single family homes in Santa Clara County in the last week. Now, if we look at offers, instead of going back from last week to this week, we're looking at 1 week of data and 5 weeks of data. The reason I look at 1 week of data is I'm trying to see changes. 5 weeks is to get rid of the statistical fluctuation. So the real key is down here, jumping ahead to 23 days of unsold inventory. That's up from 17, I think it was, well, we can go back and verify, 17 even. So that's a pretty significant change. But when you look at it 1 week, you went from 16 to this 31.1. That's huge. Anyway, if you look at inventory up here, or not inventory, sales of the last week at 225, and if you multiply that by 5, you get 1,125. But 5 weeks ago, you were at 1,492. So that's showing you the magnitude of the slowdown. Go over to condos and townhouses, multiply this by 5. That's real easy. 555 versus 685. 155 versus 208, multiplied by 5, you're at 545 versus 629. So basically what it's showing you is the offers in the last week are significantly slower than what they were over the past 5 weeks. And again, Memorial Day was in there on Monday, and so there normally would have been less inventory for buyers to pick from and things of that nature. So in a week from now, we will have a much better indication of whether this is a real slowdown or if it's just the statistical statistical fluctuation. Now, supporting a slowdown is typically, I say, the Friday before Memorial Day, the 5 weeks before, are where we have the most transactions. So this number here is expected to be starting to go down. And if you go back to last week, it was at 1565. So it has started to go down. So it's following what is the absolute normal trend in Silicon Valley. Moving on to looking at days of unsold inventory countywide, the red line is Santa Clara County, the brown line is San Mateo County, and the condo line, the orange line is the condos in Santa Clara County. And you can see that we've slowed down a little bit, improved, and then boom, we had a dramatic change last week. So, and this is the 5-week data. So for the 5-week data to start turning like that is pretty significant. And you don't have much data here, but when you start looking at the slope of that line, it's something like that. And you start coming back here to like Thanksgiving and Christmas time, and it's almost that steep. So it's not that radical of a change, but it's more significant than I was expecting. So it's noteworthy. Here is the days of unsold inventory by micro market areas. The numbers are the actual number of days. The color shows you the intensity. So wherever the color is the reddest is where the market is the fastest. You're at saturated red at 10 days of unsold inventory. None of the areas are now at saturated red. The fastest we have, it looks like it's 12 days, with being the Bay Cities up in San Mateo County right up here, and then also the affordable areas in Santa Clara County, which is Milpitas and North Valley, as well as Santa Teresa and Blossom Valley, sort of those areas. So that's, saying maybe affordability down here in Santa Clara County, and up in San Mateo County, it's maybe people saying we want to be back close to our job site now that it looks like the pandemic for the most part is winding up a little bit, hopefully. Here is the number of total active inventory. So the blue line is the available inventory for the past week. This is macro data now. This is trying to say what's going on. So I've combined Santa Clara County, San Mateo County, single families, condos, and townhouses for 1 week. Look, a week ago you were here, now you're here. That's a huge shift. That's probably the biggest shift that I see anywhere on this calendar. So you've had a huge increase in inventory. This is looking at the number of new listings. Now, the number of new listings really isn't out of line. So it's not that the sellers flooded into the marketplace, and to some degree they did. They came on, to come on at 700 when you're expecting only 580 or some numbers like that. That's a pretty good flood. But the reason for the active listings to go up so much is it also corresponded with a significant pullback in the number of buyers making offers. That's what this is, number of new offers accepted. So a week ago, you were right here, right there's the data point. You can see the turn, and now you're here. So you've dropped from some number around 675 offers in a week to some number around 525. That's a pretty significant drop in anyone's book. It's still above where you'd expect it to be based on the 5-year median, and the 5-year median is 2015 through 19, which were all great years. So, I'm sort of sounding the alarm and sounding the caution alarm, but we're still in a strong marketplace. But the reason it's caution, we were so strong that the prices were probably above where the market can really support them. So even though we're in going from an extremely strong seller's marketplace, stronger than I've ever seen in my career before the pandemic, to a strong seller's marketplace, there may be a decrease in the amount people are willing to pay for houses because of that shift. This now is overbidding. Now remember, overbidding, I would love agents to report sale prices, but we don't. We historically did prior to about 1991, because then we could see how much overbidding is happening right now. Instead, we have to wait for the escrows to close. So this data is lagged by 5 weeks. So I don't expect this data to really change significantly for another 4 weeks. And whether it changes significantly or not is only the future will tell. This again is the frequency of the different areas. You can see that Santa Clara County has been essentially flat for quite a while through here. When you have one data point like this, that's a bad data point. So I will go and investigate that one. In San Mateo County, it's been flat, but that's almost a downward slope there. It's not for very long. And you can see San Mateo County is more jaggedy than Santa Clara County because it has a smaller set of data points. So it's more susceptible to statistical fluctuation. And the condos and townhouses are actually still increasing fairly significantly. I think they lagged behind as consumers wanted to really move into single family homes, but as single family homes got out of their price range, they finally acquiesced and started buying townhouses and condos to get into something. This now is changing from the magnitude of overbidding to the frequency of overbidding. So the frequency of overbidding is how often are sellers getting more than their asking price. And right now you get saturated. Basically, this is how frequently are sellers getting more than their asking price. This number cannot get over 100% ever, because even if every seller got more than their asking price, that would only be 100% of the sellers getting their asking price. I consider 33% to 50% to sort of be a balanced marketplace. Anything above 50%, I consider to be a seller's marketplace. The only one that's in a balanced marketplace is the expensive areas in San Mateo County. Everything else is a strong seller's marketplace, with everything I'm seeing being above 0.75%. So, and the record unbelievable one again is Cupertino Sunnyvale, with 96.5% of the sellers getting more than their asking price. That means out of 100 sellers, only 3.5 sellers are getting below their asking price. So if you had 200 sellers in a given period of time in Cupertino Sunnyvale, only 7 of those 200 would have gotten below their asking price. And when I say below their asking price, they could even get their asking price, because it has to be at least 0.5% above the asking price for me to count it as an overbid. So even someone rounding up from $999,999 to $1 million would be triggered in my calculations to be an asking price offer if it came in at $1 million. Here's the magnitude going over. Now the big shift here is from year to year. So again, there's a 5-year lag. So I don't expect this shift to happen for another 4 weeks. And if it does happen after 4 more weeks, then it will be noteworthy. This is the magnitude of overbidding, and this shows you the different geographical areas. This is what was on the previous slide. So if we were in a slow marketplace, anything at 95% would be a saturated blue. And this is the average sale price to list price ratio. Anything at 117.5% is saturated red. And from 99 to 101.5% is neutral. So you can see, looking at this, even though this looks neutral, you can see that there's a little bit of a shade of pink in that square box there, because it's slightly above 101.5% by 1% at 102.5%. But this shows the average sale price to list price ratio. It includes the sellers that get less than their asking price. So this is not really an amount of how much the people that are overbidding, but it's a ratio of all the overbiddings, including those that are underbidding. This is a weekly distribution, so you can see over time. And the purple line here, the bold purple line, is the current week's data. So you can see it's still towards the top of the pack, but it's come down. This line here is going to be the peak line, and I believe that's going to be April 24th. So way back here on April 24th was our highest line on the sale price to list price distribution. Now, I'm not going to say that there's any difference between the 24th and the present day, but it's not going in the upward direction of the bold red arrow any longer. I basically would say it's stable, and based on what I'm seeing now, I'd expect this to start coming down. But remember, the highest we've ever gotten was this line up here, which it was April of 2018. So I'm not even comparing, it's a month ago, because we're now through May, and the worst month we ever had was down here in December. So you expect to be somewhere in between those two lines, from the worst marketplace to the best marketplace. So it is pretty sensitive data point. So there might, if someone was to argue, yeah, there is a small shift downwards, I would not disagree with that, but I'm not sure I would read that into it based on the data by itself. So for some reason, the data that we want to be looking at, which would be the May 1st, which is the purple line. So we're missing all the data since May 1st. So the data for the entire month of May and the first week in June is missing. So I apologize, and I will investigate that. This is looking at overbidding on a yearly basis. And even though it says Santa Clara County in single family homes in Santa Clara County only, that's what all these these other lines are, but I'm pretty confident when I did the purple line here, I did macro data. So I'm sort of mixing apples and oranges on this slide. And part of the reason I'm a little off today is just with all the stress with getting the MLS data working. It took a lot longer than it should have, so I didn't have time to do data checking. This data is independent and should be accurate. It's the median sale price is what assigns the colors. And then you have the 10 percentile right here. This, as an example, is South County, 850,000, median at 1.15, and the 90 percentile at 1.7. So most people just follow the median price, which is the middle number, which is how I assign the color scheme. But what I've added into it is the range. So you have some concept. So for example, if someone wanted to buy in Saratoga, Los Gatos, the cheapest homes are $1.9 million. The more expensive homes are at $5.5 million. So it gives you a range in each different micro market area and sort of gives you an idea what areas might be affordable for your price range and what areas are not affordable. This data is single family homes in Santa Clara County only, and it's actually a preview for next week where I do the monthly data for the month of May. And the reason for that is my monthly data starts on May 1st and goes through 35 days. That happened to end on June 4th at midnight, which is what data I have for today. So this compares directly. So just as a quick little sneak preview, median days on market is at 10. If you go back and look, that is the fastest median days on the market for the properties that are on the market that haven't sold, if that makes any sense. So it's what's still on the marketplace that hasn't sold. How long has it been on the marketplace? And at 10 days, that's a pretty phenomenal number. It's the highest ask price. Now, that doesn't mean so much because the top end of the market got really slow. The median list price would go up quite a bit. Inventory at 760, even though we're talking about it going up in Santa Clara County single family homes, this is still a record low. We've never had a May with that low of an inventory before. In fact, I think the lowest is right here at 960. So we're more than 20% below our previous low. So the fact that if that huge increase was in Santa Clara County, and it was, that the increase from I think it was about 670 to 1,017, if I'm remembering my numbers correctly, that isn't so bad because there's so little inventory, but it is sort of shocking to see those kinds of numbers. Now we'll go down to offers accepted. So now you sort of get a speed of the marketplace. You have 8 days. Well, it's almost a record. It was beat out here by last year, but notice that there's a strike through the numbers. The reason I have a strike through the numbers is last year the MLS in their wisdom decided to freeze the number of days on the marketplace to not penalize sellers that came on the market during COVID. So you could sell a house with 0 days on the market, and at some point in a couple more weeks from now, we got to the point where 50% of the homes that were selling while with 0 days on the marketplace. So this number actually went to zero. Actually, I think it might have been a couple weeks in the past, but it's not accurate data. So if you ignore last year, which is a strong reason to ignore it, then you look back at it, and this is the fastest we've had. We've never had only 8 days, median days on market. Look at the average days, 14. It's never been that low before. So we're coming out of one of the fastest marketplaces we've ever had. Number of sales, 1,367. That's a strong number. Yes, we've had stronger years, like you can come back here to 2012, and basically every year before 2012. And one of the things that has been happening is as homes appreciate, fewer and fewer sellers were selling because of the Prop 13 penalty, which was part of the motivation from the real estate industry to pass Prop 19, was now those sellers can move to try to bring on more inventory. And maybe that's what we're seeing finally, even though the law was effective for close of escrows way back on April 1st, maybe the huge flood of inventory was Prop 19. You make that argument reasonable, but then why wasn't the same thing happening in San Mateo County? It's interesting that it's limited to Santa Clara County, the huge increase. Yes, there was a 10% across the board increase, but that I could explain almost by the holiday. What's so bizarre is that 30% increase in inventory in Santa Clara County, along with a 33% decrease in the number of buyers in Santa Clara County. Moving down to closings, so that you get sale price, 110% essentially. You're close to your previous record here in 2018. I think it falls in a second place. 83 83.2% of the sellers getting more than their asking price, very close to 83.5. In fact, back at 83.5, I would consider even $1 over asking price to be over. Now you have to be that half of 1%. Whether that changed in my statistical analysis because of the changes of the MLS made the difference or not, it very well could have. It's at least close. I would call it a tie from a statistical point of view. Looking at the median price, the cheapest homes now in Santa Clara County, single family homes, are $1 million. The more expensive ones are essentially $3.7 million. The median sale price is $1,650. That's pretty significant. I don't know if any of you picked up the newspaper and read the article. I took a little chuckle out of it where they did an article, I think it was out of Data Quick, and it was that homes in Southern California are appreciating 50 cents a minute, $1 every 2 minutes. So I said, we have more expensive homes generally. We've had outrageous appreciation. Let me do the calculation. So I used $1.6 million for the median price home, which is conservative since it's now at $1,650. I used that 0.75% a week appreciation in my table that we've been having for several weeks. And it turned out we're getting appreciation rate on the median price single family home in Santa Clara County at $1.19 per minute. Not that it's worth anything, but if it's noteworthy in Southern California, I just wanted to see where we stood up here. Then if we look at the number of closings, 1328, now you have to come all the way back to 2005 before you had more closings. So when you're in a hot marketplace, your TFT ratio drops, so more of your sales are closing. So even though we're not at record number of offers accepted, we are at record number of closings, and the low TFT ratio explains that. But that is a good point. The thing that's impacting the data now is I question the MLS, but I'm not seeing any red flags. What I think has happened for whatever reason is a third of the buyers in Santa Clara County went away. Now, at 10% going away because of the holiday weekend, I would not question it. So we've basically had somewhere around 23% more buyers go away than I was expecting. And we've also had a flood of sellers coming on the marketplace at 33% above. And those two things bother me. It bothers me that it's Santa Clara County single family only, but that's the hottest marketplace. So, I'm sort of perplexed that there's no indication the data's bad. If there was, I would point it out. I would have tried to correct it. There's an anomaly going on that raises my concern, but it coincides with an two MLS changes. They added in a new database and they were having some technical issues, and it corresponds with a holiday. So there's three things that would all impact the data, but I'm having a real hard time finding any logical reason why it would only impact single family homes in Santa Clara County and not in San Mateo County, and why it wouldn't impact condos and townhouses. So I think it is a real change in the marketplace, but the question is why, and why is it only impacting that one component? There's more that needs to be found, and believe me, I'll spend some time looking into this because that's one of the reasons I look into this data, is trying to understand it. And I do the data every single day in between, which was part of the reason I knew that things were happening this week. You can't just process this data and get it posted at 8:50 in the morning and know what's happening. I had some idea going into it based on the data on Friday. I don't know what the real data is, and I don't do the PowerPoint, because that's a lot of work to do all that, but I have some indication. And with that, I am finished up, so I will take any more questions. And these are the URLs if you want to look and see about more data, like if you want to go back and listen to it because I was going too fast or whatever.
Well, thank you. Yeah, it is perplexing, but it seemed like things stopped the week before and the week after. It seemed slightly weird, even in the rental market. It was like it sort of stopped completely. It was really weird. So I think maybe everybody went on vacation for 2 weeks instead of 1 week. I don't know.
Well, we may have, with COVID, people may have been itching to get out, and maybe Memorial Day weekend was a more significant holiday than normal instead of a less significant holiday than normal.
Yeah, I think so. At least it seemed like it just in the rental market. So maybe that'll reflect on the sales too. I don't know.
Yeah,
It's just sort of odd. It felt like it just stopped.
Well, it's interesting that, it's tough to, a 10% slowdown, it's sort of like commute traffic. In rush hour, if you took away 10% of the traffic, you'd be speeding. during rush hour traffic. It doesn't take, once you're at capacity, it doesn't take much over capacity to really slow the market down. So that 10% decrease that I would expect at a holiday, you would notice that. Now, it's interesting that you're saying you noticed it for 2 weeks. My business actually went the other way. I was more busy last week than I've probably been any given week. I was writing up offers for buyers, and I also resold my listing for about the third time. So, it was actually a very productive week for me, which is part of the reason I'm also surprised by the data that I'm seeing from the MLS. But that's one of the reasons you do data, is without doing the data, we let our mindset get influenced by what's happening in our own professional business, and that can be completely out of sync compared to most people.